Thank you very much, Mr. Chairman. Thank you, Mr. Chairman, for your testimony. Over the last several years, the Federal Reserve has been providing stimulus to the economy through QE3, through other programs. And particularly as we're on the verge of the sequestration, it seems that our fiscal policy is not complementary to your policy, in fact, contradictory. And as you suggest in your testimony, if we could, in the short run, have a complementary policy that would also add jobs rather than subtract them in the short run, add growth, that we would actually do better in closing the deficit and, in fact, provide an opportunity in the long run to solve some of these challenging problems. In addition, and I like your comments, if we continue to sort of use austerity as our major approach, that, I presume, would complicate your ability, as you suggest you can do, to, in a measured way, move away from quantitative easing at the right time. Could you comment on those points?
Well, as I've noted, and I noted again today, monetary policy is no panacea, is no cure-all, and we do not have the ability. We can all disagree on how powerful these measures are, and I do think they're effective, but I don't think that they can offset the 1.5 percentage points of fiscal restraint we're seeing this year, for example. So in terms of the near-term recovery, I think there is a sense in which monetary and fiscal policy are working at cross purposes. Having said that, I want to just be clear that I am not in any way denying the importance of long-run fiscal stability. I just think that to some extent, the fiscal policy decisions being made are mismatched with the timing of the problem. The problem is a longer-term problem and should be addressed over a longer time frame, and in a way that, to the extent possible, and perhaps it's not entirely possible, but to the extent possible, does no harm with respect to the ongoing recovery. And that's the kind of balance I hope that Congress will consider.
So do I. But and maybe repeating myself, is that if our policies in the short run were complementary, that would probably bring down the deficit faster than the current sort of cross purposes. Is that your sense too?
Well, certainly I don't know if it would be literally faster in the short run, because on the one hand, you'd have fewer cuts and tax increases, on the other hand, you have greater growth. So those two factors might be going in the other direction. But it is true that you get less bang for the buck, so to speak, for a given cut or a given tax increase because of the effect on short-term growth. So you would get a longer and a larger long-run deficit impact and do less damage to the growth process by looking at this over a longer time frame.
Thank you very much. Let me quickly turn to another issue, and that is the Basel Committee announced significantly weaker liquidity coverage ratio rules, allowing sort of the use of mortgage-backed securities as liquid assets, et cetera. Do you intend to follow that approach with respect to the Fed, particularly the cautionary words you gave us today about risk-taking and adding leverage to the financial markets?
Well, I think that will be our starting point. We need to start with the international agreement and ask ourselves, to what extent do we need to strengthen it? To what extent do we need to customize it for the U.S. context? You have to remember that unlike capital, liquidity requirements are a new thing. And there was a significant amount of discussion about what was reasonable, what might be the side effects of liquidity requirements in other markets and the like. And so there was a bit of iteration in terms of what the international agreement was. But we will certainly, of course, meet the international agreement, and then we will be looking to see whether additional steps or U.S. customization is necessary.
Finally, and very quickly, Senator Crapo touched on the European situation. From afar, it looks like their policies of austerity have not helped them grow at all. In fact, have complicated their economic situation. Is that a fair judgment?
Well, austerity is not the only problem. They have obviously high interest rates and a variety of other factors that are affecting their economies. But again, I would say that it is possible to achieve both objectives, short-term growth and longer-term fiscal sustainability, with a more judicious combination of short-term and long-term fiscal adjustments.
Thank you very much, Mr. Chairman. Thank you, Mr. Chairman.